Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Welcome to the daily update from the Forex Peace Army. Well guys, I hope that you will not be upset that current weekly research we have dedicated to the New Zealand dollar, because on the New Zealand dollar, by my thought, we could find the most clear setup among any other pair, any other currency. So, and by some occasion, or not quite occasion, but very significant reversal pattern has been formed on the New Zealand dollar on the higher time frames, on the monthly and on the weekly time frame, right at the moment when the euro currency has hit the hard rock resistance on the monthly time frame. You know what I'm speaking about, and unfortunately guys, you hardly will understand the total picture without reading the weekly research, because the setup, the core point for all next analysis will stand on the higher time frames on the New Zealand dollar. So the daily video research is just the continuation of the higher time frame analysis. So maybe you will find some not big amount of time and read the weekly research just to understand clear what is going on really on the New Zealand dollar, because the current setup is really interesting. In the two words, the major idea is that New Zealand dollar in the medium term perspective could show really a significant price action, and this move could be somewhere around 800 pips or even more to the downside. And now we see the signs of it. We have discussed some moments yesterday on the previous week. For example, this butterfly, and we even trade the New Zealand dollar to the downside as the scalp trade and one trading session trade. But in fact, the situation on the New Zealand dollar currently is much broader and much more interesting than just we have discussed in our daily updates. The idea of the video research will be dedicated to understanding where we could take the short position to join with the potential move to the downside. That could be really significant. And if you know, the butterfly pattern very often becomes the part of something bigger. Wedge pattern, free drive, head and shoulders pattern very often includes and contains the butterfly pattern. And on this picture, I suspect that we could get the head and shoulders, the reversal pattern. Since our picture where the pattern has been formed is the monthly or weekly, we need to see some multiple candle pattern on the daily time frame. That just can't be just a bearish engulfing, just two candle pattern or something of that sort, or even one candle pattern. That's too few for dealing with the monthly time frame. We need to see some multi candle pattern, and one of them is the head and shoulders pattern. I suspect that we will get them, because you could see that neckline stands right in a significant area of support. That will be the daily oversold. And take a look, major 3/8 support. Since previous action to the upside was really significant, and it's really solid momentum to the upside, and market will hit the oversold, we could count on some deep retracement to the upside, and that stands in a row with the potential 127 head and shoulders pattern. So it means that currently on the daily time frame we could make the conclusion that we should watch for an area between 83.75, 84.25 area is an area where it should search the possibility to enter short, because retracement should be somewhere in this area, I suspect. Besides, that will be the short-term stretch pattern, should not be directional, and the minimum target of this pattern stands in the middle between the bands of the oscillator predictor. I don't have the second band that shows the overbought, but the middle will be approximately right in the same area. So that will be also the target of this potential stretch pattern. I call it as potential because market has not quite reached this area, but as you will see a bit later, we probably will see how market will reach this level and touch this neckline and probably this area of support. The reason why market now shows the bounce to the downside beyond of this butterfly stands also the monthly pivot resistance 1 right in this area. You will see it from the weekly analysis, and that is also the completing point of greater ABCD pattern also on the weekly time frames. 1618 extension target stands right here. So here market was the resistance. So the first task we have completed. So we know that market will reach the support. That will be really significant support, and that retracement will be probably solid. So let's shift to the 4-hour time frame chart. On the 4-hour time frame chart, you see the ABCD pattern that we have traded previously. To be honest, guys, I have traded this pattern only to the minor 618 extension, but as you can see, our suggestion that market really could continue move lower was correct, and market indeed has continued move lower. Now the target of this pattern stands at just one moment, calculate this. It's around 182.56. So that is very close to daily fib support and daily oversold. You see that my software shows that lower band stands at 82.40. So it means that right in this area we will get not only this one support, but we will also get this completing point of this ABCD pattern that will give us an agreement with the major 3/8 support. That's really a significant moment. Besides, take a look at the ABCD pattern itself. The CD leg is a bit slower than the AB. This usually leads to some deeper bounce to the upside when the market completes the target of the ABCD pattern. Since we at oversold, we will be at oversold, we do not much interesting with this level because it's too close to the completing point and to the support. Hence, the two levels that we will be interesting with are this confluence resistance 83.75 and next level 84.40 with the monthly pivot weekly pivot resistance 184.56. It's right here. But keep in mind that when the market will proceed slightly lower, the levels will also drift slightly lower because they are based on this low, on the most recent low. So interestingly, that take a look that this confluence support coincides with our lower border of our range that we have specified, 83.75, 84.25. That will be the lower border, and also it will coincide, take a look, with the weekly pivot point. So we know that as this level will be suitable for retracement after the completion point of the ABCD, because we know that market could show the even 618 retracement right from the completing point and then continue move lower. That is possible, and that will be not something unusual and something suspicious. This retracement right to this level is normal, but not above it. So that will be simultaneously our, if you could call it, some quality sign of our setup. So market will continue move higher. Well, in this case we should be careful with the taking shorts, but I hope that this will not happen, because our invalidation point will stand right at the stops. That is the top of the pattern, and that is an invalidation point for this medium-term setup. So since this is confluence support or resistance, we could get, for instance, ABCD pattern to the upside, compounding retracement, because market hardly will pass through the confluence resistance, including the weekly pivot point, just the first touch. Market could respect it with some bounce down, and then will break it and continue move to this resistance level. That is also possible. That's why keep an eye on the potential patterns. If we will not get any, then probably we have the chance to apply scale in. So when the market will hit for the first time this level, we could take small short position, and if market will break it to the upside, well, we will add more at this level, because currently it's very difficult to predict how a retracement will take place. But as we suspect the deep retracement, and as we suspect that as we have on our roll this confidence resistance, there's a great chance that this really could be some sort of the ABCD to the upside. Also, guys, if you're a scalp trader, you could focus on the potential stretch pattern if you have the skills to trade it, because as I many times discussed, stretch pattern is rather tricky, since this pattern is contour trend pattern, and it demands some skill of trading for that. This is suitable not for everyone, but for others, just watch for this level, this range. In fact, that will be our range for taking the short position.